Hello, I'm Adrian Finnegan. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, America's next president, Donald J. Trump. He's promised to put America first and reject globalization. It got him elected in the biggest shock to the political and financial system since Brexit. We'll size up how America's role in the world economy could change. We'll look at what America under Trump will mean for oil-dependent economies here in the Middle East. Will he attempt to slap sanctions back on Iran? And with a crucial OPEC meeting on the horizon, what does his energy policy mean for oil? Plus, remember when Hillary Clinton warned that Trump will do to the US economy what Mugabe has done in Zimbabwe? Find out what Trumponomics will actually mean for the US and emerging African economies. It was the result that global capital markets didn't expect. Donald Trump, the man who promised Brexit times 10, will control the world's biggest economy come January. That's about a third of the world's GDP. Hundreds of US economists warned against Trump. They said that his anti-trade, anti-immigration policies will do anything but promote growth. The world's leading trade body, the WTO, agreed. It maintains that protectionist measures can hurt the world's poorest the most. But the Trump presidency has been described as a game changer for financial markets. Well, why? Let's start with what we think we know are the basics of Trumponomics. Trump favors protectionism. He's promised a 45% tariff on products from China. He's also threatened a currency war with America's biggest trading partner. He's anti-free trade. He wants to renegotiate existing treaties like the North American Free Trade Association between Canada, Mexico, and the US. He's even threatened to pull out of the WTO. And he's going to reform the US tax system. Essentially, this will mean tax cuts across the board, something known as fiscal stimulus. He wants to cut the corporate tax rate to 15% from the current 35%. He's signaling a new era of government spending, and he wants to get rid of Obamacare. He's also anti-regulation and wants to change banking laws put in place in the wake of the global financial crisis. Dodd-Frank is one of them. That's the piece of regulation that prevents bank bailouts. He could transform the world's biggest economy and its trade relations with the rest of the planet. But don't forget, Trump also inherits the world's largest debt in the shape of US Treasury bond market. It's now worth around $20 trillion, and it's going to go up if he cuts tax and starts a big spending spree. And that debt is largely owned by the rest of the world. Well, Donald Trump's first move was to reassure the world that he's not the loose cannon that many fear him to be.
I want to tell the world community that while we will always put America's interests first, we will deal fairly with everyone, all people and all other nations. We will seek common ground, not hostility, partnership, not conflict.
S&P Global Ratings affirmed its AA+ credit rating for the US in the wake of the vote, and there was a post-election stock market rally. With me now, Francis Donald, senior economist with Boston-based Manulife Assets Management. Francis, 370 prominent economists warned that a Trump presidency would be dangerous, and yet we saw Wall Street reacting pretty positively to the result. What's going on?
I think markets are focusing on two things. The first one is that while we know what Trump the candidate looks like, we aren't quite yet sure what Trump the president will look like. We've only had one sample of that, and that was the acceptance speech. So markets are trying to get a sense of, is Trump going to be more of a pragmatist? Is he going to align himself more with the Republican platform? Or is he going to appear more to be maybe a populist, more aligned with his candidate rhetoric? What we've seen so far from that one sample size is that he will probably be a little bit, or he appears to be more pragmatic. But the second element that I think markets are focused on here is something that nobody was really expecting, which was a Republican sweep of Congress. We know the Republican platform. It's very clearly laid out for us, and markets are interpreting it to be growth positive. That's good for markets for now. The challenge is going to be that there's still a tremendous amount of uncertainty. We're still very early days. Markets are going to be watching very, very closely what the president-elect says over the coming months.
Many analysts had said that the dollar would plunge in the wake of a Trump victory, and yet it strengthened. What's happening there?
I think markets are focusing on this GOP platform, which says, look, we're probably going to see lower taxes, maybe a cut to the corporate tax rate. We may see less regulation, and we are expecting a pretty sizable infrastructure package coming from the government, more government spending. That's ultimately positive for growth. And just taken alone, all other things equal, that implies that we're still going to see probably a Federal Reserve interest rate hike in December and more growth. That's all dollar positive, but I will say the caveat is, for now, we will see what happens over the coming months.
You talk about a raise in interest rates. Of course, Mr. Trump has been pretty hostile towards the boss of the Fed, Janet Yellen. Is she going to see it to the end of her term? Will she be replaced? And what of interest rates? I mean, is the Fed now going to be able to raise rates that everybody had thought in December?
Well, prior to the election, markets were anticipating, and it was general consensus, that interest rates were going to rise by 25 basis points in December. There are two things that could throw that off course potentially. One would be a dramatic tightening of financial conditions or a lot of financial market volatility. We have not yet seen that, but again, it's still early days. And the second would be if the Federal Reserve anticipates that this new election will cause downside risks to growth, downside risks to job creation. Now, it's still too early for them to assess that, but they're probably very cognizant of uncertainty. Now, when it comes to Chair Janet Yellen, the Wall Street Journal reported yesterday that she probably wasn't going to be replaced before her term was up. She has a 4-year fixed term that ends in January of 2018. But you can be sure markets are going to start thinking about this probably in the new year. Who is going to lead the Federal Reserve after January 2018? That's going to become a market preoccupation, in my view.
All right, so markets are adopting a wait and see attitude. Trump has promised, what, 4% growth in GDP? Is that feasible?
Well, we estimate the potential growth in the United States is 1.5% to 2%. So GDP growth around 4% is very ambitious. We need to take this one day at a time. And the most important factor for growth is going to be that infrastructure spending package. And not just how much money the government intends to spend, but where is it going to be spent, on what, and what is the timeline to do that? That's probably, from our point of view, where our forecast would be most impacted, is when those details related to infrastructure spending come to the surface.
Will Trump follow through on his threats to impose tariffs on Chinese-made goods? And if he does, what's that going to do to the economy?
Well, China is probably going to have to do what many other major trade partners to the United States have to do, which is, again, wait and see. Now, in the meantime, what we're expecting from many trade partners to the United States, and China in particular, is that they're probably going to become more cautious. So their central bank, their government will probably become a little more cautious, maybe want to provide an additional insurance to the economy in case we move towards protectionism trade rhetoric. So you may see further monetary policy, you may see more fiscal spending, more government spending out of China. You may see a little bit of a faster depreciation of the currency. But for now, they're probably waited with bated breath to see, what does Donald Trump look like? How does he govern as president? And how do the Republicans fall into that mix?
Francis Donald, many thanks indeed for being with us. Now, with key elections coming up in Germany and France, the focus turns now to the effect a Trump presidency could have on the European Union. Lawrence Lee reports.
Occasionally, a moment in history throws everything up in the air. In European capitals, power brokers are trying to work out exactly who Trump is, whether he knows who they are, and what his new power will mean to them.
The dawn is breaking on an independent, united kingdom.
This we know already, that the British vote to leave the European Union, to take our country back, as the Brexit supporters put it, was echoed loudly by Trump, who said his victory would be Brexit plus. And it follows that those European politicians who also want to bring down the establishment in the EU have been delighted by his win and will hope for his support in the coming months and years, especially when so many major European countries have elections of their own approaching. And perhaps the biggest threat to the stability of the European Union, Marine Le Pen of the French National Front, who must surely now have serious hopes of becoming president next year.
Les Américains ont voté.
The Americans have voted. They've refused to accept the status quo. They've taken a decision which refuses to accept that things are static and that the world moves, that the world changes.
Faced with this, Jean-Claude Juncker, the head of the European Commission, called for an urgent meeting with Trump to understand his agenda. And it's hardly surprising, fault lines like the Baltic states, which the EU wants to defend against potential Russian aggression, or the situation inside divided Ukraine, are suddenly open to question, as Trump appears close to the Russian President Putin and has questioned his commitment to the core values of NATO. Consequently, European establishment figures have been lining up to ask for some clarity as to what the new position is between Europe and its supposed oldest friend over the Atlantic.
A strong NATO is good for the United States, and it is good for Europe.
The result is different than most people in Germany would have wanted, but of course we have to respect it.
One of the biggest problems for the EU's leadership is the sense that the only bit of Europe Trump cares about is his golf course in Scotland. For decades, the assumption of joint thinking between the EU and US has been a given. Not, it appears, anymore.
Mexico is also bracing for a new reality on its borders. The Mexican peso saw its biggest fall versus the dollar since the 1994 tequila crisis, all on fears of what Trump may do. John Holman reports now from Latin America's second biggest economy.
Mexicans woke up to the worst possible news after the US elections. For those at this taco stand, horror mixed with disbelief. After all, the new US president as a candidate said this.
When Mexico sends its people, they're not sending their best. They're bringing drugs, they're bringing crime, they're rapists.
His pledge to deport all undocumented migrants and build a bigger wall on the border between the two countries, with a plan to crack down on the money US-based Mexicans send their families back home till Mexican authorities agree to pay for that wall. That's infuriated but also worried Mexicans. But it's not just migration. Donald Trump's also said that if he doesn't get what he wants, then he'll pull the US out of NAFTA, the free trade agreement that the country shares with Mexico and also with Canada. And all of that meant that as soon as it seemed that he would be president, then the peso plummeted to a historic low and there was consternation in the markets. Mexico's finance minister and central bank chief came out to try and reassure investors and the markets. But if Trump follows through with his campaign policies, it won't just be Mexico that suffers, analysts say.
The United States in many ways depends on Mexican trade, as well as Mexico depends on the US trade. So it's going to be interesting to see if someone tries to tell him that even though these are the ideas and the proposals by which he was elected president of the United States, this could have an enormous impact, negative impact in the United States.
For now, Mexico's president, Enrique Peña Nieto, is trying to keep it cordial, saying he's ready to work with Trump, who he also controversially invited to the country as a candidate in September.
Precisamente, hace unos momentos,
just a few moments ago, I spoke to the President-elect Donald Trump to congratulate him on his victory. It was a polite, pleasant and respectful conversation, and we all agreed that we need to work in an atmosphere of trust, since our countries are very important to one another.
If he wants the relationship to work with them, Donald Trump will have to soften towards his southern neighbour.
Let's shift our focus now to the Middle East. If President Trump can somehow undo the Iran nuclear deal, then he may have an impact on the oil price. He wants the US to grow its oil market share and make US oil more competitive, which is a worry for OPEC. Now, OPEC was already struggling to finalize a deal on production cuts this month, and that meeting is less than 3 weeks away now. Well, joining me from London is Naeem Aslam, Chief Market Analyst with London-based Think Markets. Naeem, will a Trump presidency be good or bad for the Middle East?
I think it really depends what approach he's going to take when it comes to the GCC, when it comes to the Middle East. Why? Because oil is something which matters quite a lot for Donald Trump. And I think that he is going to support the US shale oil industry. If he does support the US shale oil industry, that means that we're going to have more supply glut on the market. And we are speaking of a market which is already suffering with enormous amount of a supply, and the market is waiting for that moment when we will have an equilibrium on the market. But with the US shale oil, with the Trump backing, that means that we're going to have a more supply on the market. So let's go back into the Middle East and look from the Saudi Arabian perspective. More oil on the market is going to put more pressure on their budget, because Saudi Arabia has gone into the debt market. They wanted to issue more debt in order to fund their budget deficit. And they also want to protect the peg that they have, the dollar peg. So with more oil, the dollar peg is going to be very much under influence. Now, whether Saudi Arabia would use dollar as a currency for in exchange of oil, that would be also questioned as well. And Donald Trump, he would have to very much bear in mind that how he's going to play, because the biggest buyer for Saudi Arabian oil is actually China. So Saudi Arabia can say, okay, look, we are not going to use dollar. We're just going to use the Chinese yuan rather than using dollar.
So will Trump's victory galvanize OPEC into action on November 30th?
I think OPEC has a real opportunity right now if they really want to do something with respect to curbing that supply on the market. If they do want to curb that supply, now is the opportunity, because with Trump coming next year back in the office, we are certain he's going to say, okay, let's care about environment, let's start producing more US shale oil, let's start that rigging process. And I think OPEC have to give a very clear and acute message that we are united, and when we say that there is a supply cut, that means there is a supply cut.
Egypt's President Sisi was the first world leader to actually speak to President-elect Trump. This week, Saudi Arabia said that it was no longer going to supply Egypt with oil, and that would be indefinitely. What does a Trump presidency mean for Egypt?
Yes, so if Saudi Arabia isn't going to supply oil to Egypt, do we have a shortage of supply, or do we have excess supply of oil on the market? Because Iran is ready right there. They can always get oil from Iran. And remember, if Donald Trump says that, okay, let's put those sanctions back on Iran, Iran would be in a position where they say, okay, you wanted to have oil from us, we can give you perhaps at a much better competitive rate than what Saudi Arabia is going to give you. So Donald Trump would have to choose be very careful in choosing who he is going to be friend with, because ostensibly if Egypt was there, Russia was also there as well, in calling Donald Trump and congratulating him on his victory. So if he wants to maintain relationship with Egypt, or if he wants to maintain relationship with Iran, he also has to bear in mind how that would factor in with Russia at the same time.
Naeem, you mentioned Iran. Is the nuclear deal under threat? American firm Total has just signed a deal to explore a huge gas field there. What are the implications of a Trump victory for Tehran?
Yes, I think Obama administration, they have worked really hard, and now they were just about to entire world was about to get some sort of a dividend out of this, because remember, it's not all about America as well. We have a Europe, we have Russia there. The companies over in Europe and in Russia, they are literally aching to start business with Iran. So if Trump comes and then he says that, okay, these sanctions going to be back on Iran, I think Europe is not going to be that much happy, and then Russia is not going to be that much happy. So these two, both continents or both regions, they are very, very important when we are talking about sanctions, or if President Trump is going to bring those sanctions back on Iran. So he has to be very careful that he doesn't alienate other countries such as Germany, such as Russia.
Naeem Aslam, good to talk to you, sir. Many thanks indeed for being with us on Counting the Cost. Economists are also looking at the impact of potential US protectionism on emerging markets like Africa. The fear is that access to US markets will dry up. Africa's economies are already battling with sluggish growth. Lower commodity prices are also hurting. The US spends billions in Africa through aid and investment, but whether that will continue under Trump is very much an unknown quantity. Joining us now from Johannesburg is Herman Warren, Director for Africa with the Economist Corporate Network. Good to have you with us, Herman. What are the dangers of a Trump administration for African economies in general?
I think the first set of points to make is that Trump gave very little airplay to African issues during his campaign. The three sets of times that I can recall involved some tweets he posted, which weren't particularly flattering related to the situation in South Africa. He delivered a speech last August where he mispronounced Tanzania. And during another speech on the campaign trail, he indicated that he would arrest Yoweri Museveni as well as Robert Mugabe, the presidents of Uganda and Zimbabwe respectively, calling them despots and dictators.
Trump is, when all is said and done, a businessman with a businessman's instinct. What would you say to him to encourage him to invest in Africa?
You have a market of over 1 billion people. It's a young demographic. There are significant opportunities for U.S. Inc., which they have taken advantage of, but still remain. And then just from a security perspective and stability perspective, it would be important for America to have a presence going forward. And in fact, that's what we've seen under the Obama administration, where the government has been very proactive, working on various fronts, including militarily. And I think it would be a mistake to disengage.
Finally, Herman, while we've got you here, I want to get your thoughts on Zimbabwe and the currency crisis that's continuing to unfold there, sparked in large part by a dire shortage of US dollars.
They, in effect, demonetized the Zimbabwean dollar in 2009 after that bout of hyperinflation and made legal tender nine currencies, including the South African rand, the euro, and the dollar. But there is that dire shortage, as you say, of foreign exchange. And most recently, they announced that they want to introduce a bond note of sort to try to deal with this liquidity crisis. That's created a lot of anxiety because people still remember the very painful days of hyperinflation, where they would arrive off of public transport and wait in a line for food. And when they got to the front of the line, they didn't have enough money to buy food, neither for the fare to get back home. So it's not the most ideal of situations in Zimbabwe.
Herman Warren, many thanks. Good to have you with us on Counting the Cost. Well, as we were discussing there, Zimbabwe currently in the midst of a very debilitating cash shortage. Al Jazeera's Haru Mutasa reports from Harare.
It's become a way of life. Sleeping outside the bank is the only way some Zimbabweans can get cash. There have been cash shortages for months because the government is broke. Some banks have limited withdrawals to $50 a day per person.
3 days, 3 nights.
We spent 3 days, let's just say 3 nights. We come and sleep out here. Maybe tomorrow I'll withdraw a little money. Some the next day, maybe again on day 3.
When the sun comes up, the queue moves painfully slowly. Charles Matimba saw his savings wiped out when the Zimbabwe dollar crashed in the late 1990s. The 63-year-old pensioner suffers from poor health and worries he could spend days in the queue.
I always think about my time wasted. 25 years is not a joke, but it was going for nothing. So I don't know who can help us to ask the government, what about those pensioners who lost their monies, who lost those years, like 25 years, like 30 years. We didn't get anything till now. That's where my problem comes from.
The government has announced plans to introduce a local currency called bond notes. They aimed at easing the crisis. Some economists warn the situation may not improve soon.
I think definitely they will persist unless and until there is probably inflows of capital into the country, which is unlikely. But without that, definitely the queues are going to persist, I think.
Right now, all most people can do is wait.
It's painful. We leave our families at home, sleep put here in the dark, in the cold, sleeping on cardboard boxes. We don't even remember what our beds feels like anymore. It is disgraceful.
More people are planning to spend another uncomfortable night here. They hope tomorrow will be easier. Maybe they'll be allowed to withdraw $100 instead of $50. Then they won't have to do this again, at least until next month.
And that's our show for this week, but there's more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and indeed entire episodes for you to catch up on. You can also get in touch with us by tweeting me at @afinnegan. Do use the hashtag AJCTC when you do, or you can drop us an email. countingthecost@aljazeera.net is our address. But that's it for this edition of Counting the Cost. I'm Adrian Finnegan from all the team here in Doha. Thanks for watching. We'll see you again. Bye for now.